Hey, everybody, welcome. In this video, we're going to be going through Rockhampton area. We're going to be looking through some of the leading indicators in terms of supply and demand. And we're going to go through a little bit of the economics and population growth. And then finally, I'm going to go through a case study purchase in Rockhampton. Before we get underway, a bit of an advice disclaimer. This information is only general information only. It does not constitute financial, legal, or tax advice. Strongly recommend that you seek financial advice or tax advice, legal advice, mortgage broking advice from a qualified financial advisor, accountant, legal professional, or otherwise. Please only take this as a grain of salt. And if you're looking for specific property advice, I'm happy to talk through your investment property needs further. Use the link in the description to book in some time with me, and I'm more than happy to discuss what an investment property might look like that's fit for your purpose. So in Rockhampton, over a 3-month period, we've had some areas that have had more than 6% growth. However, the majority of Rockhampton in Gracemere, Park Ave, a few other areas are largely 3 to 6% in capital growth over a 3-month period, which is relatively good. If we have a look over a 12-month period, you can see there that the majority of Rockhampton has grown by more than 12% here over a 12-month basis, which is great. Gracemere, you can see Norman Gardens, Park Avenue, those sort of areas, we're looking at more than 12%. And then the remainder of Rockhampton, anywhere between 6 and 12% over the last 12 months from a housing value index basis. In terms of asking property prices, you can see that for the long history since about 2010 onwards, property prices in Rockhampton were very flatlined. If anything, they were going down over that period. Up until about 2022 here, you can see that more or less property prices were decreasing. Then towards the end of COVID, we had a sharp incline and property prices have risen over that period from around about the 300,000 mark to around about the 600,000 mark. For 3-bedders, you're looking at around about 520 at the moment. But when we take all houses into account, we're looking at around about $600,000. Now, that's a capital growth rate of roughly 100% over a 4-year period, from the beginning of 2022 right up until the end of 2025, where we are now. In terms of vacancy rate, you can see here again for the long period of time, vacancy rates were relatively high. We had vacancy rates hitting 6% in some cases. And then towards the end of COVID, towards 2021, 2022, you can see that the vacancy rate dramatically decreased there. Since the beginning of COVID, where we had vacancy rates of roughly 2%, till end of 2021, we had less than 1% here. And it's been the same way, although vacancy rates have increased somewhat over the last 3 or 4 years. You can see that we still have vacancy rates that are well below the national average of roughly 1.3%. Same is true for the amount of stock in the market. You can see that for the long period of time that there was a large amount of stock on the market. The overwhelming majority of stock was on there for more than 180 days. You can see here, 2019 onwards. Then as COVID kicked off towards the end of 2019, you can see that property listings fell off a cliff. And we probably had a peak low here towards the middle of 2024. And you can see that listing numbers have somewhat stabilized here from the middle of 2024, where we're hovering around the 250 listing mark there. So you can see there over this area here that listing numbers have somewhat stabilized, with the majority of properties now selling in less than 30 days. In terms of overall weekly rents, again, we hit the end of COVID there, sort of mid 2021, end of 2021, just here, and rents started rising dramatically. There's a bit of a drop here towards the end of 2024. However, overall, rents have been rising. We can see rents were around about 370, 380 towards the end of 2020. Now rents are looking at roughly $200 more than that. We're looking at around about $550 per week in rent. So we've seen about a 65, 70% increase in rents over the last 4 or 5 years. Overall, the gross rental yield has declined. We had rents hitting as high as around about 7% there towards the end of 2022. Long-term historical averages are around about 5%. Around about 5% there at Draw Straight. And then as COVID kicked off, rents rose. We hit about 7% here in Rockhampton. And now that capital growth has been exceeding rental growth, rental yields have come down conversely, and they're relatively low. We're looking in comparison to the overall long-term average. We're probably sitting at the same as the long-term average now at about 4.8%. The overall population forecast for Rockhampton at the moment, we're sitting at around about 84,000. It's tipped to hit just under 100,000 by the year 2041, which is a 16.18% increase. There are a couple of areas where population increase is the largest. You can see here in the north around Limestone Creek, Parkhurst, Mount Archer area, population is forecast to grow by 118%. And then here in Gracemere and Gracemere South, population is forecast to grow by 50% in these areas. Most likely because it's the most room to move. And at the moment, the population is relatively low in these areas. In terms of employment, unemployment has taken a bit of a hit lately. We are getting close to around the 7% mark. We're looking at about 6.5% in unemployment at the moment, where you can see that regional Queensland, and the Australian average is just over 4% here. However, unemployment has been rising in Rockhampton, and as a result, you can see it's hit 6.2% there over the last 3-4 years. The number of jobs have been growing though since 2020 up until 2024. You can see that we've hit about 45,000 local jobs in the area. So as opposed to 2012 to 2019, when job growth was either stagnant or in decline, job growth has been increasing lately. In terms of the annual change in job growth in Rockhampton area, it's been relatively meager in comparison to Queensland, which has a job growth just under 4%. However, the average annual growth rate is around about 1.5% here. So it is doing more than the long-term historical averages. The overall number of building approvals, whether it be non-residential and residential, has declined. You can see there that historically it has come up, hitting a peak in 2023, 2024 of 300 million rather in terms of value. And now it's had a sharp decline in 25, 26. We're seeing roughly 50 million here in both non-residential and residential building approvals. If we have a look at the overall economy, ranked highest to lowest is healthcare, education, retail, construction, accommodation and food, and public admin, making up the vast majority. That's probably about 80% there of the overall workforce. Mining only makes up about 5%, which is only slightly higher than the regional Queensland average. This is a case study of a property that sold in November. It sold for $650,000. It's a 3-bed, 2-bath, 1-car house that sits on 620 squares. It sold for $650,000. Total upfronts, including deposit and stamp duty alone, is $157,000. However, this doesn't include things like building and pest, legal representative costs, apportioning of council rates, anything like that. It's just stamp duty and deposit, 20%. This property, assuming a 4.8% gross rental yield, has a rent appraisal of $600 per week. Interest only based on 80% is $2,600 per month at 6%. Council rates are relatively high in Far North Queensland. You're looking at around about $3,800 per year, $500 worth of water. Insurance will vary from policy to policy, provider to provider, but let's use an average of $2,500 for this property for house and landlord protection. And then property management, assuming 8.8%, is just over $50 a week. All in all, you're looking at an annual cash flow deficit of around $9,500 on this property. So thank you everybody for watching. If you do have any questions about investing in Rockhampton, investment property in general, or anything else I can do to help clear up or provide information, please don't hesitate to reach out. Just leave a comment and I'll more than likely get back to you. If you do want to talk about specific investment property advice, then again, hit the link in the description. That'll take you straight through to my calendar and you can book in a complimentary initial consultation. No hard sale, just a general discussion about how you can purchase investment grade property. Thanks again. Have a great day.